how did you manage to get into a BBC documentary about trading?
Charlie Bъртън.
Charlie's trades are looking after themselves and he's taking a break from his screens.
You turned $10,000 into $100,000. Why did you decide to do this? What you learned from that process? What are the strategies and the kind of analysis you're using in order to trade the financial markets?
My strategies.
What are the best advices you'd give to people in regards of trading psychology, dealing with emotions, and so on?
Best advice that I could give to people to help them with their emotions are
traders that are starting right now their careers. What would you tell them in order to make the learning curve as fast as it could be, and on the other hand, not to fall in the trap of big losing trades and blowing up accounts? Здравейте и добре дошли в новия епизод на БенчМарк подкаст. Днес ще направим един, меко казано, уникален епизод, в който съм поканил може би един от най-известните трейдери в момента в целия свят, Чарли Бъртън, човек с почти 30 годишен опит на финансовите пазари, човек, който е легитимен трейдер, т.е. в историята, в своята трейдерска кариера е правил няколко успешни челенджа, едно от които е да превърне $10,000 в $100,000 за по-малко от 3 години. Така че епизодът днес е насочен към всички тези от вас, които под една или друга форма се интересуват от търговия на финансовите пазари. Може да сте начинаещи, може да сте напреднали, може да сте печеливши трейдери. Въпреки това смятам, че всеки един от вас, пак казвам, който се интересува от трейдинг на финансовите пазари, ще намери изключително ценна информация в разговора, който ще направим с Чарли. Чарли е човек, който следвам от адски много години вече, човек, който говори много за начина на мислене, който всеки един трейдер трябва да има, и на мен това ми е помогнало много от гледна точка на пътя ми като трейдер, така че съм сигурен, че епизодът ще бъде супер интересен и супер стойностен, пак казвам, за бъдещите трейдери от вас. Епизода по разбрани причини ще бъде на английски език, като в самото видео ще сложим субтитри, така че и да не знаете английски език, ще разберете какво си говорим следващия час и нещо. Така че без много да говоря, пожелавам ви приятно гледане. So, hey Charlie, it's good to meet you.
Likewise, thanks for having me on your podcast and over here in the UK.
Before we begin with the talk, I really want to say that for me it's huge pleasure and honor to have you on the show, because you as a trader, as somebody who's live on YouTube, you had pretty big impact on my development as a trader, and I believe that we're gonna give very good content to our audience and all the people that are interested in trading on the financial markets. Because, yeah, as we talked before we started the conversation, the valuable information on the YouTube and the social media in general is not so much. So, yeah, I know that we're going to have a wonderful conversation.
No, likewise, it's just thank you ever so much for having me on. And I'm always up for having a chat about the markets with more serious traders. So not some of the fluffy stuff that's out there, as you say, out there in the world. So it's nice to have a chat here about the financial markets and about trading in general.
Yeah, wonderful. Well, all right, let's start from the beginning. I mean, there are a lot of topics that we're going to go through. We're going to talk about your journey. How did you start trading? Something which is incredibly interesting is the challenges you did through the years. You turned $10,000 into $100,000, which is an incredibly good result for less than 3 years. We're going to talk about how you see the trading nowadays. Have the markets changed for the past several years? But yeah, to begin with the real stuff, how did you get into trading, and what's made you fall in love with the markets?
Well, I was in the financial markets anyway. I worked for financial institutions here in the UK, and so I used to advise independent financial advisors on our funds and pensions and financial products. So I worked ultimately with a fund management company, and so I used to go out and advise financial advisors on our funds and pensions. And so although that's got nothing to do with trading. That's long-term investment stuff. And it just so happened that a financial advisor that I used to meet regularly in my role there, in my corporate role, said to me one day, he said, Charlie, he said, would you like to come and learn how to trade the options market in the US? I've got a ticket here. You come with me. And there was a US company, this is in the late 90s, who were doing a course on how to trade stocks and options. Very basic, really, but it gave us the basics of stocks and options. So I went on that course with him. I think within about 3 months, he'd given up. And I just carried on, and that's just the way it normally is. So he was too busy and just didn't get into it, didn't pursue it, because it's a lot of work, as you know, to learn all this stuff.
Yeah.
And so I just carried on with it, and that's how I got into the markets. It was something I was always interested in. In the 90s, I was buying shares just based on tips that I was getting from people in the industry, but this was very different, you know. And so that was how I first started getting into the markets. I was always interested, and then that came along with Rob, and I did that with him, and then I just took it on from there. But really, back then, there were traders around, but I remember paying a trader £250, English pounds, just to show me how to place some orders and what a limit order was and things like that, because I didn't know any of that stuff. So there was no YouTube, there was nothing to learn independently from at that stage. So you just had to try and fail yourself, and that's what I went through that process, because that was the only way to do it really back then.
What it was like to be a trader in the late 90s?
Well, bearing in mind, when I first got into trading, I was just swing trading. So I was just buying stocks, holding a US stock for usually 3 or 4 months at a time, and then writing a call option against it, so selling a covered call. And so when you say trading, yes, it is trading, but it's not the same as what many people who are doing a lot more shorter term trading is today. But that's how I started, because it was on the side of my career. I had no intention of leaving my career and becoming a trader. I loved my career, but several years later, I was exhausted from my career and thought, maybe I'll see if I can make this transition into perhaps being a full-time trader. So the differences were, well, one, I was just doing it on the side from my career. I think the main difference back then was just you had to pay for everything. All information. I had to subscribe to countless services to get fundamental information on stocks, whereas now so much of it is just freely available. And that was one of the big differences back then. I was spending thousands of pounds a year just on research in order to get certain pieces of information, fundamental information on stocks and stuff. Even charting back then, there's very few charting services. They were there, but they were very expensive. You didn't have trading view like we do nowadays, which is pretty cheap. And so very different world in that regard.
Yeah. Правя кратко прекъсне, за да ви кажа, че ако това съдържание ви харесва, може да ни подкрепите, като се абонирате за канала, харесате видеото и цъкнете камбанката, за да получавате известия, когато публикуваме нови видеа. По този начин ни помагате да достигаме до все повече хора, които се интересуват от инвестиции на финансовите пазари. Alright, so I know you from a BBC documentary, Traders, Millions by the Minute. Can you tell us more about it? And how did you manage to get into a BBC documentary about trading?
Well, yeah, it's a good point. How did that come about? It came about purely by coincidence. So I was going to a trader show in London. I was booked to go to this trading show, and I was doing a live head-to-head trade-off at this trading show. And so it just so happens that the BBC were in the process of filming this documentary. They'd heard about this trader show and got in touch with the owners of the trading show and said, could we come along and film? When they found out that there was a live trading competition going on down there, they said, it'd be great if we could film these guys doing this live trade-off. And they said, could we speak to one of the two traders and just have a chat with him? And so Lisa, the organizer, phoned me up this one day and said, the BBC want to come and film you at the show. Are you okay with that? And I said, yeah, sure. So the producer phoned me up, and I was sat here in my office, and I just started. We had a chat, and about an hour and a half later, I got off the phone, and she then said, would you like to be in the documentary more than us just filming you've got a lot to say about the markets. It'd be great if you could be, fully in the documentary. And that's how it all came about. So she said, but we need to check you out. So she came over here and watched me trading without the cameras. So she came out first of all, and we had another chat for an afternoon, and then they came out and then filmed for the show. But they came out about, I think there was 5 separate days of filming just to have like 10 minutes in that program in total, probably. So it was loads of separate days that they wanted to come out and film different elements. And so it was only a tiny bit of the trading or me talking about the markets in my office that actually made it into the show. She said, yeah, it's a lifestyle show. Yeah. We want to film you going out for a run or washing your car or whatever. They did so much extra filming. And the funny thing was that the live trade-off that they were there and filmed never made it into the program either, because again they said it'll just be boring. A live trade-off is not that exciting, and so they could have clipped it, of course, but anyway. So and also they wanted to position me as a retail trader. So they decided, we want Charlie in with all these retail traders, but being the successful retail trader, so to speak. We don't want to show him at this live trader show as an expert, so to speak. So that was another reason why they ended up not putting that in, because they wanted to put me in that given episode and just have me sitting at home and doing all the other things that I was doing. So there was a lot of stuff from an editing perspective going on, and that I subsequently realized that they want to picture you in a certain way. And so they edited it. I was joking a lot of the time in the filming, but none of that made it into the cut because they wanted serious Charlie. Yeah. So they only put the serious bits in. Yeah. So but anyway, nevertheless, that's how it came about. And they filmed on several occasions for over a period of 4 months, I think.
Yeah. All right. So about your trading, probably in most of the traders, when they are developing as traders, there is some sort of a aha moment. So when you get the idea of trading, for example, you don't have to win every single trade. That's you gotta play this game on the long term. You gotta imagine, in a sense, how these probabilities will play out on the long term. And yeah, did you have some sort of a specific aha moment when all the pieces of the puzzle just came together and you understood what you have to do as a trader in order to have a bigger chance of winning on the long term? Or it's more of a natural process, evolving process that doesn't have a specific aha moment with you?
There probably is probably a bit of both. I did feel that I did have a light bulb aha moment, but of course there's lots of little things that change along the way as well. For me, my aha moment was the realization that every time I would get overconfident, I would then trade too big size or get too aggressive on trading, because I'd have just had a good period. Normally it would be over a period of 2 or 3 months. I'd have a good period of trading. My confidence would become elevated, and then I would give back my profits. And this is all in that first couple of 2 years of trading or so. And so my equity curve was doing this, and so it would peak as I would then start getting overconfident and start taking trades that I didn't previously take, and then it would start coming down again and then come back up. So my aha moment was, well, if I can maintain the same discipline that I had in the upside trajectory when I was being more disciplined, if I just stay that way, I won't give it back every time. So I went through this cycle for a good year or so of making money, giving it all back, making money, giving it all back. And that was my aha. It was greed and overconfidence that affected me. And if I could constrain that and realize, be self-aware enough to not do that, then I might be able to carry on. The equity curve can carry on. And that was my aha moment, really, personally. It was all about greed and overconfidence. Lots of traders suffer with the opposite. They suffer with fear and hesitation and all of that. For me, it was greed and overconfidence. That's what I needed to get overcome.
Yeah. Did journaling your trades help you do this?
No. Because back then I didn't know about journaling. So, you were talking about the late 90s there. I didn't know anything about journaling at that stage. So, no, I didn't start journaling for, a good several years into my trading before I started to journal. So, no, I didn't. Obviously, I was going back over my trades in order to get that realization that what the problem was. Then yes, of course I was going back over trades and realizing what the problem was. But it took me a year of doing that and repeating that same process to come to that realization of what the problem was. So it wasn't specific journaling, no, not back then. But yes, there was an awareness of what I was doing, and if I stopped doing those things, then, and in fact, actually, one of the things that, when you've got a really strong habit like that, overconfidence being my issue, it's very difficult to just completely stop it. So what I would do is, when I would feel overconfident and I'd want to take another trade, what I learned to do was take it. So I satisfied that need to still want to take that trade, but I would actually trade it with a much smaller position size. And so I would still scratch that itch, so to speak, which was natural within me. But then it wasn't affecting me because I was only doing small trades and small positions on it. And so I think that was an important point to make. It's very difficult to completely shut off that type of behavior. So I still managed to, I guess, satisfy that natural flair to see another opportunity. But because some of those opportunities would work out, of course, but I would only have a small position on it.
Yeah. Правя кратко прекъсване, за да ви кажа, че ако се интересувате от търговия и инвестиции на финансовите пазари, долу в описанието ще намерите линк към сайта на БенчМарк Финанс. Ние сме един от най-големите инвестиционни посредници в България и предоставяме достъп както до международните финансови пазари, така и до българска фондова борса при изключително конкурентни условия. Освен това, може да погледнете и секциите с нашите обучения, чрез които помагаме на все повече българи да бъдат финансово грамотни. Right. So I said this at the beginning. One of the most interesting things in your career is the challenges you did, and you turned $10,000 into $100,000 in a little less than 3 years, which is an incredibly good result. I mean, a lot of hedge funds can imagine about those returns for that period of time. So first, can you tell us why did you decide to do this? And what you learned from that process?
The reason I did it was because I was asked to do a webinar with a group of traders in the US. And so I was asked, oh, Charlie, what topic do you want to cover? And we would like to do this as a series of webinars over a period of a few months. And it'd be great if you could do some sort of trading over that period. And I was thinking, oh, you know what the US are like? They like a bit of flair.
Yeah.
So initially I thought, well, maybe I could do some sort of challenge over that few months, that 3 months that I was going to do this guest webinar with these traders. And then I thought, yeah, but you know what will happen? Even if I make money over that 2 or 3 month period, people will say but that could be luck. So that's how it came about. And I thought, well, why not do a challenge over 2 years? And they can follow me, what I'm doing on YouTube or whatever. I'll do updates on YouTube periodically. So that it goes beyond reasonable doubt that if you can prove that you can make money over a 2-year period with those sorts of, bigger gains that I was trying to achieve. So that's how it came about, just because I was asked to go on and present to some traders in the US and coming up with a topic around, trading and doing some trading which is logged, so to speak, and that they can see going forwards how I was getting on. As it turns out, I said, oh, okay, what about 10 to 100K? And that's why it was done in dollars as well, because it was for a US. I was doing it for a US. And let's see how I get on over 2 years. So the idea was to try and do 10K to 100K in 2 years. It took me 2 years and 8 months in the end, because I didn't achieve it in 2 years. And even, I'll be brutally honest, I didn't think that I would achieve it. I thought it was just a nice headline. And I thought, well, if I did half of that in 2 years, that would still be a phenomenal return. Or even if it was only, if I did 100% or 200 or whatever, it'd still be an amazing result. And so, yeah, it was just the way it worked out that it did happen. Now, I do think, coming back to what you said about hedge funds, yeah, I mean, it's different when you're just doing $10,000 into $100,000, and I was taking bigger risks, of course, as well, in order to do that. It was just to prove a point of what can be achieved, but I always said, look, I'm taking bigger risks per trade, so every trade I was risking 2% of the account on, and then on some of those trades building the position as well to make the position overall even bigger as a trend would materialize. So it's not what I would advise to do, and this is what I always said, for someone on their main account. If that was my main account, I wouldn't take that risk. 2% is too big for me. So but as an exercise, just to prove what can be done, that's why I did it. What did I learn from it? At that moment in time, I was doing 2 styles of trading on that account. I was both day trading and swing trading. And at the end of that entire process, at the end of the 2 years, 8 months, I look back over the entirety of the trading, and the bulk of the profits came actually from swing trading, not from day trading. And a lot of people think, oh yeah, but surely if you're day trading, you're trading away every day, you're going to make more money. And it doesn't always work that way. Don't get me wrong. The day trading worked well to diversify from the swing trading. So when I was having a drawdown in the swing trading, normally it'd mean that I was actually making money in the day trading. So it would compensate the swing trading. But overall, when I looked at the profit and loss of both, or the profitability of the entire challenge, the bulk of the gains, not all of the gains, some of the gains came from day trading, but the lion's share of the gains came from swing trading.
All right. And can you tell us briefly, what are the strategies and the kind of analysis you're using in order to trade the financial markets? And since you have at least 30 years of experience on the market, do the strategies you're using tend to change, or it's like a constant view of the market?
Yeah, my strategies I've been using for certainly the last 15 to 20 years. Nothing's particularly changed since probably the financial crisis, since sort of 2007. So nearly 20 years. My style is pretty much the same now as it was then. Don't get me wrong, I don't day trade anymore, but that's purely because of time and lifestyle and wanting more time. But my overall approach hasn't, and the things that I use hasn't overly changed. So I tend to use a top-down approach to my analysis. So I'll look at higher time frames first and then work my way down. And I also use an intermarket based approach as well. So if I'm looking at a given currency pair like euro dollar, then of course I'm going to be looking at the other currencies against the dollar as well, to see how they're moving. So, and also the bond market and all the other interrelationships. So there's a lot of analysis goes into to the swing trading to get an overall view. So once I've then got an overall directional view from the top down approach to the analysis and intermarket analysis, then I want to try and find entries based on that view. So if I want to be long a given market, then I'll have certain entry techniques that I strategies that I use to then get me in. So the analysis comes first for me, and then the strategies are just the strategies for entering. So I'll have I have a few different strategies for entering. So depending on whether, if I think, for example, I might have a bullish view on something, but it's actually been in a big downtrend, but my analysis is calling for a big reversal in a given market. So I'll have reversal techniques like for divergences and looking for divergent behavior among markets and technical divergences, and sentiment as well. I use sentiment a lot as well. So when markets been coming down, there's always a point where sentiment gets really pessimistic and very saturated as far as the amount of pessimism out there. And that's usually a good sign when you've got, people are max short at that point, especially the hedge fund managers, and general sentiment is very pessimistic. It's usually a good sign to then start looking for divergences technically for the long side. So I'll use that sort of approach, but then of course I'm always trading within trends as well, and I'll usually look for pullbacks within trends to get long as well. So I'll do like anything else, like anyone else would do. I'll do breakouts and pullbacks into prior highs, moving averages. I use moving averages a lot. Some of the nuances about how I use a moving average, for example, is going to be personal to me. But yeah, it's basic stuff really. It's basic technical analysis. The main thing for me is just getting that directional view. Once I've got the directional view, then I have that bias, and I want to continue trading that bias until my analysis has played out.
Yeah.
Or I'm proven wrong.
Yeah.
Which happens a reasonable amount of time as well.
When we're talking about trading, there are like two big camps, like the discretionary ones, the discretionary traders, and on the other hand, we have the systematic traders. So I have heard from a lot of professional traders that the only stable market approach that has a relatively huge potential of making money on the long term is when you apply some sort of discretionary in your trading. So, the analysis, the market context, if you want the fundamental picture. And on the other hand, we have the systematic approach, which we can code it and make a robot trade instead of us. So, but there are a lot of people that say, systematic trading is not working on the long term, and probably, in a sense, this is one of the reasons why expert advisors tend to work for some time and then they suddenly stop. So, how do you view this thing? Are you more of a discretionary trader, or you also like systematic trading? And what would you say that is more potential and more profitable for the traders, which they should focus on?
Yeah, good question. Personally, well, I think we've already answered it. You mentioned the word context, and market context is important for me. And that's why, as I've just said, I use a top-down approach in the analysis, intermarket analysis, sentiment analysis. So yes, in that regard, I'm a discretionary trader. And for me, trading is much more than just trying to make money. Trading is the art of pitting yourself against the market, and the enjoyment and the challenge of trying to work it out like it's a jigsaw puzzle, and you've got to put all the pieces together. So for me, it's much deeper than just trying to make money. What I find is that some systematic traders, people just want a strategy that they can sort of paint by numbers and just follow blinkered and just tell me when to buy and when to sell, and with no other analysis. And it's just a pattern, and that's all they want to do. And that's fine, but you're right that type of pattern more often than not will fade out over time. And so they have to continue, go back and tweak the pattern, tweak the strategy, because it's so specific to the current market data, and the market data is always changing. For me, trading has to be deeper than that. It's got to be the love of and the art of taking all that information, whether it's fundamental information as well, sentiment, working out all of the charts, and then putting it all together in order to form that view. That's, for me, the large part of the enjoyment of trading. So yeah, I'm personally not a fan of systematic or mechanical trading. But I understand why other people do want to do it. But I'm just saying the reason why I do what I do is because I'm passionate about the whole process of the art of trading. And so if I was just following a specific pattern, that was all I did, I would find that very tedious, and I wouldn't get the same enjoyment out of trading as I currently do.
Yeah. What you just said is incredible thought. You're not here for the money. You're just, in a way, for the game on the market.
The money's the side.
Yeah.
That's the side issue. That's what comes on the back of the passion for it all. And so if I always find, if your goal is just to make money out of the markets, you probably never make money from the markets, because people, you've got to enjoy it. You've got to be passionate about this, because you're going to be rejected by the market over and over again. And if it's just about making money, then you're probably not going to deal with the rejection that the market gives you. Whereas if you're passionate about the market, you embrace all the rejection and all the other stuff that it throws about, the frustration when you think you're in a great trade and then it rolls back over. You embrace all of that, and in some regards, I just welcome all of it, because I have to take the bad stuff and the rejection as well as the good stuff. And so whereas someone who's only looking to make money, they're really going to struggle when things aren't going so well.
Yeah. Tell us more about how people can find you. I know you have a trading room. We are going to put links to your trading room and your websites under the description, under the video. So yeah, tell us more about what you do and what services you offer traders that are interested.
I have an online trading room. I'm in there, 5 days a week, and I do sessions every day. There are like hour-long or so sessions. I've already done 2 sessions this morning. I've got another session after this recording. I just love it. I love talking with my community, because when I started trading, but not so much in the late 90s because I was working full-time, but when I went full-time trading in late 2001, I underestimated how lonely trading can be. And so I went from a very busy career to just sitting at home, in front of some screens with no interaction. And I realized that I crave interaction. So I found a way to create interaction and have the trading room. So it satisfies my need for interaction with people as well. So it's a live online trading room. I'm on the mic sharing my screens and either doing live analysis and looking for new trades, which I'll be taking. I'm more of a swing trader, but I'm going through all of that daily. And then we do training sessions as well, and news-based sessions when there's non-farm payrolls or whatever.
Yeah.
We cover it all. And I'm very lucky that within the community I've got traders who have been trading 20, 30 years plus as well. So I've got senior people in there. So we've got people who might have only got into trading in the last 6 months or a year, but we've got a lot of very experienced people in there. And so it's a great community. People dip in and out in the, a lot of people have full-time jobs, and every session's recorded. So all of our members who might be all around the world, they just pick up the recordings and watch whatever recordings they want to watch as well. So it serves a purpose for everybody. So and yeah, when I'm trading, because I'm FCA regulated here in the UK, or FCA authorized by my regulator, I can call trades legitimately. So I have my own app. And so when I do take a trade, people can see, oh, okay, Charlie's gone long this or short that. But most of my trades these days, I'm looking to hold for several weeks, if not a few months. So I'm not rotating 3 trades a day or anything like that. But people within my community will intraday trade as well, and shorter term trade. But I just show what I'm doing, and then people also get on with what they're doing too.
Yeah. All right. Another pretty big question that we have as a, I don't know, I wouldn't say it's a debate, but more of a two big opinions. They're based pretty much on the idea, what should I focus on more? High win rate or high risk reward? And I know that you're a pretty big fan of high risk reward ratio, like 1 to 10, 1 to 20, probably 1 to 30. Can you talk more about this? I mean, why do you prefer that approach to the market and not the other one? Let's just make high win rate with smaller risk reward ratios.
Yeah, it's a great question, because firstly, there's no right or wrong when it comes to what a personal preference is. And I'm smiling. You're going to see why. The reason I'm smiling is because for me, like I've already said, trading has to be a challenge for me. And I've got to get something from this. It's not just about trying to make money. So trading, at the end of the financial crisis, probably by 2013, trading was, I don't want to say boring, but it was very straightforward for me. They were what I call vanilla trades. You'd get into a trade, run it to a target with a 55-60% win rate, let's say, overall. Sometimes you'd have a higher win rate, but it wasn't challenging. And so I've always wanted to take myself outside of my comfort zone. So the way to take myself outside of my comfort zone was to hold on to trades longer. I would see plenty of my trades that I'd banked that would carry on going further. So I really started to explore looking for bigger risk rewards. So it was a personal thing for me, just to give myself a new challenge within trading, because I found I never want to use the word easy, because it's never easy, but certainly trading became I don't want to even say monotonous, but I wasn't being challenged mentally. So I needed something that was going to take myself out of my comfort zone. So I deliberately did that in order to satisfy my own need to always be pushing my own boundaries. And the way to do that was to look for bigger risk rewards. So you don't have to do it, but I get a personal enjoyment from actually deep down in my core. I don't want to hold on to these profitable trades. I was in a trade just 2 weeks ago. I was up £120,000 in open positions, and currently they're back at about £60,000 in open positions. Now a lot of people wouldn't be able to deal with that, but I embrace that, and I enjoy the challenge. Maybe it rolls all the way over and it amounts to very little as a trade, or maybe it ends up becoming a 200 or more £1,000 trade. So I enjoy the challenge of all of that, but I appreciate that it's certainly not for everybody, and for the majority of people, finding a balance of, like you said, win rate of probably 50%, let's say, roughly a 50% win rate with maybe a 1 to 2 risk reward is more than enough. And so, but for me, it's more than that. It's taking myself outside of my comfort zone, because this is not just about making money as much as I can on 6 times out of 10. It's not about that. I'd rather make money out on 3 times out of 10 personally, but have that whole challenge in amongst all of that as well. I get more from it that way.
You talk a lot about trading psychology, and as we know, emotions, psychology in general, is one of the most difficult things to deal with everyday trading, simply because we are humans and we have feelings, and a profitable trade will always make us feel certain way, and a losing trades will always make us feel certain way. So you talk a lot about mindset. What are the best advices you'd give to people in regards of trading psychology, dealing with emotions, and so on?
It's such a broad question that, but
Yeah.
but the best advice, if without anything more specific, that I could give to people to help them with their emotions are self-talk. So talking out loud to yourself as if a mentor was sat next to you. So when you're either about to execute a trade, or you're thinking about taking a trade, or you're in a trade and you're worried about it, and you're looking for all the reasons why you should get out of it, pretend that there's a mentor sat next to you saying, talk to me about what you're seeing at the moment, what you're thinking at the moment, and talk out loud. It's been proven by psychiatrists that when you talk out loud, you fire a different neural path within the brain. So when you're just sat there looking at it, staring at a chart in silence, you've got a certain neural pathway that's being fired. If someone sat next to you saying, what are you thinking right now? And then you have to then talk out loud, then you fire a different pathway. And so very often that can really help act as an arresting mechanism to you doing the wrong thing. So for example, let's take someone who's in a profitable position. Before they took the trade, let's say that if they were using a target, their target's up here, and they've got into this trade and they're a little bit into profit, and they're already looking for all the reasons why they should come out.
Yeah.
And we can always do that. So it's always easy to find a reason. Just go down to a smaller time frame and you'll see some sort of reversal pattern. It's bound to reverse now, or there's a piece of news that's coming out, or whatever. So the self-talk is, in this example, is I can't afford to bank this profit right now, because if I bank this profit right now, it's not going to be paying for the inevitable losing trades that come along. Even if it does roll over and become a loss, if I take 100 setups like this, I've got to hold on to the ones that are going to get to their targets in order to make those statistics work out if I'm only going to be right a given percentage of the time. So it's constantly talking to yourself, and like if you had a mentor next to you and saying, why, I can't afford, in this example, I can't afford to bank that. It may make me feel good right now, but I can't afford to do it. And so that would be an example of using self-talk to act as an arresting mechanism to stop you from doing that thing, which is probably one of the most common things that I come across with traders is banking profits too early. They jump out of a trade too soon. So that's just one example of helping to stop that sort of thing from happening.
Yeah. What did you say about journaling? Because from my experience, I just think that my trading went on another level the moment I started journaling my trades. Because, for example, when you have a trading journal and you can go back 6 months ago and see what you have done on the market, what you have missed, what you could have improved in your trading, you start developing a different perspective towards the trading itself. So what should you say about journaling as probably a important part of what traders do on the markets?
Yeah, you've said something in there I'll pick up on actually, but journaling, it's a way of building confidence. So if you journal all your trades, then come back and do a regular review. Because people say, well, I just journal. What do I get from that? Well, you journal the trades, as you've said, and then you go back and review. So maybe, I don't know, if you're a swing trader, maybe you would review once every month of your journal, or maybe every 6 weeks. If you're a day trader taking a few trades a day, then you make your journal and probably do a review at the end of each week. And the point of reviewing is exactly what you said. So you get to see what happened long after the trade had completed. What did happen? Did it move a lot further than where you exited? Did you come out early? If you got stopped out on a trade, was your analysis good and or your pattern actually okay? You just got nicked out of a trade only for price to go higher. So journaling shows you a different context than just looking at your P&L and your brokerage account. So for example, you might get to the end of the month and your P&L is flat, is zero. And so you might think, oh, that wasn't a good month. Actually, if you've journaled, then you go back over your journal and you can say, well, actually, there was 2 trades there that I actually came out early on. I can see that I banked early, or coming back to one of the things you just said, I missed out on this trade and this trade. And actually, if I hadn't have missed those trades, my P&L would have been very different. So it acts as a confidence builder. And this, coming back to what do you journal? Yes, you journal all of the trades you've taken, but I think it's really important that not enough people do this, is keep a separate journal of all the trades that you didn't take, that you may have missed, either because you just weren't around, or maybe because of hesitation and you didn't feel confident and you didn't end up taking a trade, and then you subsequently found out that it was a winner. Because missed trades can also help you with your confidence as well. So I do think, journaling and reviewing of the journaling is really important.
All right. You know that AI is a pretty big topic for the past 3 or 4 years. And technically, we have been seeing AI on the financial markets for a very long time. It's just more popular now because we have the large language models, but the big institutions, they have been using this technology for, I don't know, probably 2 or 3 decades even. But when we have the technology, and when we have the fact that probably 90% of all the trades on the markets are executed by some sort of robot, so there is not a human interaction really on the market. Do you think that the markets will change on the way they work? And do you think that trading will become harder for the next 5 or 10 years? Or it's just like that we have some constant principles upon which the market is working, and those principles actually won't be changed? So how do you see this thing?
Well, firstly, coming back to does automation change the market? Automation started coming into the market in the 1980s. And so I remember in the early 1990s, there was already a lot of concern that automation was going to destroy the ability for the individual trader to make money. And it was the same again at the end of the 1990s and into the early 2000s. And the story continues. So I don't necessarily believe that that's going to be the case, because as you've sort of already said in your question, ultimately, systems are programmed originally by humans. So they come from the concepts of humans, much like AI does. And so don't get me wrong, I think AI is a great supportive tool for the decision-making process to interact with. I don't use it, but I know plenty of traders from what I hear do. But so I think that if that's what you want to do with your trading, and there's nothing wrong with that at all, to use AI in that way. But do I think that it's going to change the market? Yes, it is going to change. Do I think it's going to be more difficult for an individual trader to trade? No, I think it's always been difficult for traders to trade, for individuals to trade. Possibly with all of this access to information, maybe it is more difficult now than it was previously. We have more information, more tools, more computing power than ever before. It's fine for the big hedge funds who have got huge R&D development budgets to spend, but for your average individual retail trader, they've still got a huge amount of resource now available to them. But sometimes that can actually be a hindrance. There's nothing wrong with just trading some basic patterns and trends. So that will hopefully never end. Trends have to continue. That's just the nature of things.
Yeah, absolutely. All right. So what is the advice, the thought you'd give to the traders that are starting right now their careers? What would you tell them in order to, make the learning curve as fast as it could be, and on the other hand, not to fall in the trap of big losing trades and blowing up accounts and things like this?
What advice to a new trader? The first one, or to speed up the process, as you said, it's very difficult to speed up the process too much. You can speed up the development of learning patterns and all of that. So that is something that some traders can learn quite quickly. One thing you can't speed up is the emotional side of things. So there is always going to be a limit as to how much someone can learn. You can learn the technicals of whatever it is that you're trading, your systems, your approach to the market. But unfortunately, there's no substitute for time. Every time you take that next trade that's either a winner or a loser, then it takes time to learn and build that back catalog, if you will, of your trading. So I'm a firm believer that doesn't matter how many tools we have available to us. Are you an experienced trader after 1 year or 2 years? No. You could be profitable, but emotionally, you might have just traded through 2023 and 2024, and you started in 2023, and the stock markets were just going up. Nothing different. And then all of a sudden, Donald Trump gets in, and the whole tariff wars started in February of 25, and you're like, what the heck? And so there's no substitute for experience, and unfortunately that just comes with time in the market to actually be there when volatility massively expands. You can look back historically at a chart of the great financial crisis, but there's nothing like being there. Like there was nothing quite like just being here just recently in 2025 when all the volatility exploded again there for a month or so. So yes, you can become profitable as a trader in a given amount of time, but always be humble because if you've only been trading a year or 2 years, you've only traded through a snapshot in time, and it might be a low volatility environment, and we're about to go into a high volatility environment, or we go into a choppy ranges in certain markets, whatever. You just got to embrace it and just see it that the first 5 years is just your chance to develop as a trader. You may be making money, but you may not be fully experienced 5 years in.
Yeah, absolutely. All right, and could you tell us more about your favorite trading books? Like, is there something a book that really helped you become who you are? What did you give as examples to our audience?
Always it's Market Wizards, the original Market Wizards book, which still for me, the subsequent Market Wizards books, New Market Wizards was a great book as well, and Hedge Fund Market Wizards, wasn't it called, were good. I'm not as bothered about the latest one that came out last year. I did read it, there was a couple of good interviews in it, but the original for me is still something very truly special. Paul Tudor Jones, and a few others, Richard Dennis, and a number within that, still ring true to me today, and the achievements that they had. And I think a lot of the time it's because many of those original Market Wizards did blow up when they started, and some of them took 10 years to become profitable. So if ever you want to, something to motivate you to stick at it, like same for me when I started, because I blew up my first account in the first year, read Market Wizards, because some of those wizards, those original wizards, they're still trading to this day. They're still managing money to this day. And yet some of them, they weren't immediately successful. So I think that's probably one of the things to take from that, is all the little elements of psychology really, and their individual stories, because they all had slightly different, obviously, approaches to the market. So I still find that book is highly motivational, even though it's in the 80s. Doesn't make any difference. Price is price, markets are markets, and it's the stories are what's important about how those people deal with certain situations.
Yeah. Well, thank you very much for the talk. It was huge pleasure to talk to you and to have you on the show. And I'll be glad if we continue making in the future talks like this, because as I said at the beginning, I really believe that we need more and more quality content on the topic of trading.
Oh no, thank you ever so much, and thank you for your very good in-depth questions as well. It's just as hard it's probably easier for me being the interviewee than you doing the questions, but very much enjoyed it. And so I hopefully that you don't have to do too much editing of our interview here.
Oh no, not at all. All right.
Great stuff.
Thank you. Благодаря ви, че останахте до края на този така интересен епизод, и знаете, ако ви харесва това, което правим, може да гледате и другите видеа на БенчМарк подкаст, които в момента се показват на вашите екрани.